Welcome to the latest episode of the Intelligent Wealth Podcast. I'm very thrilled to have along our special guest today, who is Anmol Goel, who is a fund manager. I don't want to pigeonhole you too much, but mostly, if not all, in venture capital. Is that correct, Anmol?
Yeah, absolutely. Tony, thank you very much for having me here. It's a pleasure to join you virtually today, and yeah, happy to do a little bit of an intro. People definitely are always very intrigued in terms of how to introduce me because when they look at my LinkedIn, they have a shock. They're like, okay, he's doing fund management, he's doing venture studio, he's also doing advisory, he's also doing mentoring. So sometimes even I don't know what I'm doing. But no, that'll probably be the sweetest way. Yeah. So I'm an emerging fund manager. So raising a 10 million fund. I also have my venture studio and investment arm, which deploys in a manner of tech for equity. So rather than cash deployments, it does a lot of tech deployments for super early stage startups. And as prior to my fund itself, and even now, to sort of whilst it's being set up, I also run a syndicate where we try to put together deals for our family offices and our high net worth individuals. And then, like I sort of said, do some mentoring and advisory on the side to try and help startups and acceleration boards and any other programs that are out there.
Sure, sure. Well, what I wanted to do before we get into all that, particularly Anmol, is to dig a bit deeper and find out what really makes you tick. And what I'd like to ask interviewees is a bit about their background, their growing up. So, could you tell us a little bit about where you were born, where you grew up, and what kind of class family you were in? Were you like working class, middle class, upper class? What kind of education what kind of experience do you have that got you interested in this field of work eventually? What kind of shaped you? Could you give us a summary of that?
Yeah, absolutely. I would have loved to said I was middle or upper class, but unfortunately I wasn't. So I was born in a small part of Delhi called Harinagar, and it was I don't want to make it seem like it was poverty. It definitely wasn't poverty, but it was rather humbling. So it was five people: me, my mum, my dad, my little brother, and my my nan, in a one-bedroom house. And we used to have a massive sort of bin slump around my area, and often my parents would joke that that's where they picked me up from. All right, so it was rather humble start, and I saw my parents work day and night, live separately when my dad got an opportunity to come here in the UK in 2009. Um, I came a year and a half later, but at a very young age, I saw my parents having to work tremendously hard to make ends meet, and I think that sort of lit a fire in me. Very early doors, I knew that money was a big differentiator, and if I could just have that extra bit of money, it would make all the difference. So from a very early age, I was very money orientated. During school, I chose all the business, sort of subjects, and then moving up to university, maths and economics, and as I sort of then grew out of it, moved to the UK, grew out of it. I decided to go into investment banking. I think part of the influence was probably Wolf of Wall Street, when the movie came out, and it almost glorified money there. And I was like, okay, well, if I want to be rich, clearly investment banking is the way to go. And I interned and did all my starts in JP Morgan, in HSBC, KPMG, Deutsche Bank. And, I really sort of thought this would be the way, how I would kick off. But, that wasn't to be, when you really sort of get into these really large corporates, and you make money, yes, but you don't sort of understand how the whole wheel works, right? So what I always realized, as much as I wanted to make money, more than that, I wanted to build companies. I wanted to start something of my own. But holistically, when you're looking at something which is a 2 billion vehicle, a 5 billion vehicle, you as an individual will never be able to look at all parts of it just because the humongous size of it. So then I decided to move part into venture. But no, the story was very different. Came from a small part in India. Funnily enough, when I actually came to the UK, I didn't really know the language. So I knew, like, I knew basics, I could say, hey, this is me. I have one brother, my favorite color is blue, and et cetera, et cetera. And from then on, it was just very much almost like a competition to myself, where it was like I need to be better, and I need to be better because my family depends on me. And that sort of just continued through and through and through, and here I'm sitting in front of you today.
Interesting. So, yeah, you seem to have had a even more humble upbringing than I did. I was born in the East End of London, but I think you experienced more true poverty than I ever did. Um, anyway, um, so when you moved on from your school, did you um, move out of India before you started further education, or did you do your further education in India? I think you moved out first, didn't you?
Yeah, so I came here when I was 10 years old.
Right. Okay.
So
Yeah.
I finished year five and then came here.
Yes.
As prime, I used year five was finishing, so I think I was in year five for about 5 weeks,
Right.
and then moved into year six.
So you did go to university eventually. I think that is there mention of Harvard. I think it was on your LinkedIn profile.
Yeah, I did my bachelor's from Liverpool, and then I did a diploma from Harvard.
Wow.
So I was one of the unlucky, well, lucky or unlucky, depends on how you want to see it, the COVID era of university graduates. So as I was wrapping things up, COVID struck, and my second and third year were pretty much all online whilst I was closing up in Liverpool. And I started, my 9 to 5 after sort of moving on from JP Morgan. I then transitioned into Marsh McLennan, and I realized venture was really, where I wanted to go. And Harvard did this online diploma about entrepreneurs and innovations, and how to start your own venture. It was a 3 month program that they ran online. Right, they would get cohorts of between sort of 40 to 60 people all across the world. So I had guys from South Africa, I had guys from Boston, I had guys all over the world. So I would go and do my 9 to 5 from pretty much 9 p.m. to 6 p.m. And then I would come home, and then from 7 p.m. to about 2 a.m. I would enroll in these classes. I would do my sort of almost like a night school, and try and further sort of engage how I'm going to go about setting up my own thing. And I did have my own thing on the side as well. So there was a point actually where I was working about 21 hours in a day in terms of my 9 to 5, my college, and then doing my own thing and sleeping about 3 hours a day for about 4 months.
I was trying to add up the hours there, and I think I made it 29 out of every 24 hours.
Yeah,
I
yeah.
thought I worked
Sometimes it
hard.
definitely did feel like that.
I thought I worked hard. You put me to shame. I've only been working 60 hours a week the last 30 years. That's nothing.
No, I think just because it was a young blood, right? It was the hunger. I think this was this thought that came to me a few years ago, and I think it was just as I was starting corporate, and you get your first salary, right? And
Yes.
at the age of 21, I was like, okay, 32 grand plus 5 grand bonus, okay, 37 grand. It didn't seem too bad. And I saw this guy driving a really nice car. I think it was Maserati. It was worth about 1.5 million. And I started doing the numbers because I'm a big car fanatic. I was like, right, so if I work continuously and save every single penny that I have, it will take me almost 50 years to get where he is. And that was the point it sort of hit me. I was like, this doesn't make sense. How can I work so hard? And even during university, I was valedictorian, so I worked tremendously hard during at uni. I was like, this is the best I'm doing, and it will take me 50 years of saving every single
Yeah.
penny I have to get to
Yeah.
where he is. Something isn't right. Something doesn't make sense.
Yeah, I do admire you because you're quite a young man. I do admire your work ethic, which is incredible. Because when you say you worked hard, I don't think you at university. I don't think you just mean academic study. I think you mean everything else you were doing as well. Because you still, in spite of a huge amount of other work outside of university, you still managed to get a first class degree. So that shows you're either a genius or you worked incredibly hard at your studies as well, or maybe a combination of the two. What would you say? I know you're too modest to say you're a genius, but
No, I definitely don't think I'm a genius. I think, I love to say this phrase anytime I'm running out of things, and I think I often get a little shy when people praise me, and I just say the harder that I work, the luckier that I get. I just don't know
Ah,
how it works.
that's a great quote from the golfer Gary Player, who was South African, white South African, who was one of the most remarkable golfers in history. And that's what he used to say. He used to say, the harder that I practice, the luckier I get. And I think you're spot on. You do create your own luck, really. But it's not
Mm,
just hard work. You got to be focused and driven and know where you're going. Not very well working hard, but if you're in a dead end job and you stay in a dead end job, you're not really getting anywhere, are you?
yeah, yeah,
Got to be
100%,
a bit smarter
100%.
than that. So, what sparked your interest in venture capital, particularly, as opposed to, say, investing in normal like public equities or private equity? What sparked your interest in venture capital in particular? What is it that you really like about it?
Yeah. I mean, if I take you down slight bit of story, I genuinely didn't think I would be here a year and a half ago. It was sort of one of those things where the ball started to rolling, and I was like, we'll just see how it goes, and where this leads me to. My initial understanding was investments was, very much like yourself, private public markets, and your blue chip companies, and then some of
Yes.
your OTCs, and that's where I started. The first company that I built when I was age 19 was actually a algorithmic trading platform for hedge funds. So when I was 19, I coded that and I traded that a little bit, and then the March 2020 crash, which took the markets down about 50%, completely destroyed that because I just didn't have it in plan that the markets can crash about 50%. So the
Yes.
code I had set up, was just not used to it, and it sort of crumbled, and that was sort of a learning curve. Um, but when I did sort of started doing my own thing, and this was in June of 2022, it pretty much started out of nowhere, funnily enough. So I just wrapped up my internship at JP Morgan, and I was doing a transition into going into Marsh McLennan into insurance and wealth management, and I had 3 months sort of period of where I had nothing to do. So I thought I'm gonna go travel out to South America. I love the culture, I know the language, and I'm just gonna sort of spend some time around Brazil, Argentina, Chile, and those countries. And I'm sitting in a hotel room and I'm using Reddit, and there's a forum there called r/entrepreneurs, and someone there just asks me a question that, hey, I'm a e-commerce entrepreneur. I'm opening a jewelry business, and I'm really struggling, and I need some help with my pricing. I need some help with, how to have a discussion with a potential investor. He said, he can offer me 50 grand if I can get a revenue share, and I'm just really confused. He had two or three other questions. So I just wrote back to him on that forum saying, "Hey, if you're thinking about pricing, there's a few things to consider. Think about your cost. Think about your competitive pricing. Think about market demand. In terms of the early stage investor, probably don't give revenue share. Think of equity. Look at a safe note. Just general sort of tips." And he was like, "Thank you very much." Took the advice on board, and went off. A week later, he comes back. He's like, "Thank you very much. I've sorted out my pricing. I got a pre sign up list. Got about 20 people on there. The investors coming in for about 50 grand for 10% equity. Like, doing great." And I'm like, really really happy to hear that. And he then says, "Hey, I have a few more questions, and I would like to get on a call." I said, "Sure, happy to." And then he says to me, "Hey, like, how much do you charge? Like, like, how much is it to get on a call with you?" And I was like, "Charge? I didn't know I could charge for this." I was just, genuinely giving advice because I genuinely liked, stuff like this. And I quickly Googled. I was like, well, how much do, venture capital advisors charge? How, and it said $50 an hour. So I just put $50, and he said, "Cool, give me 10 hours." And that was the first real piece into venture, and that's how things started. And from there on, I did a bit more consulting gigs where I was working with smaller startups, really sort of trying to piece the puzzle together. And as I sort of moved on with them, I realized there were certain things that were missing, the certain issues they were having with raising. I started to do a bunch of events. My thing was always being super, super proactive. So I would sometimes go to two events a day. I would do an event from 5 p.m. to 8 p.m. and then another event would start at 8, or I would then run down to from 8 p.m. to like 11, 12 p.m. That's the really good thing about London. There's always stuff happening. And I would meet a bunch of angels who would say, well, we want to really invest in startups, but we see this, this, and this as the issue. And then, me sort of being this person in the middle would be like, okay, well, I know what the startup needs. I know what the investor needs. If I can just join these two and, supply and demand at the end of the day, it will work out. And I started to do that. I started to liaise and bridge and syndicate. And then I realized, well, if I can do it for these two, I can do it for myself because I know exactly what this party needs and exactly what this party needs. And I had more H and I sort of backing me. And like I sort of said, the ball started rolling. I acquired my own tech company. We started doing tech equity. As I started making money, I started investing myself, and then now raising a fund. So day by day, it's just led me to this path. I've never really sort of been the person who's been like, in 5 years, this is exactly what it'll look like. This is what exactly I'll have. As I have this saying, right? Because if you have a 100-step path, and if you're at step one currently, and you keep looking at step 100, you will never know how to get there. If I just know what my step two is in front of me, that's all I need to worry about. And then at step two, I need to worry about where my step three will go. I don't. I every now and then will look up and say, okay, that's the ultimate destination. But worry about the next. Worry about the next. Often people worry about what's going to happen in 10 years, 20 years, 15 years, and they completely forget what's going to happen the next week. And that
Yes.
ultimately, leads them to achieving nothing. I'm very much more, um, short thinking in that terms, right? Let's put my feet on the right path for now, and then have that vision in the back of my mind where I want to be, and then we'll go from there.
It's good to have a plan. And there's an old saying, isn't there? Failing to plan is planning to fail. And you've certainly got a plan there. Well, I know you're successful at raising funds in a very competitive and difficult market. And I think you've got what I consider a relatively unique approach in that you offer to speak at lots of conferences and the like, and you have quite a good success rate at um, not only speaking at these events, but not having to pay for entry. And I suspect by now you get paid to do them or you do them for free. Uh, Which is it? And how did you get onto that track? Because I think that's quite an interesting approach, quite a good one, really, because these events can be very expensive to attend.
Yeah, yeah. No, I've not yet been paid to speak at an event. I'm hoping this year would be the first one, but a lot of them they will fly me in and they will accommodate in terms of
Fantastic.
hotels and flights. Yeah,
Yeah.
and I would get to speak free. So I think
Well,
that
that's great.
definitely covers for a big part of it. And I think it started off very similar with everything else. I think my whole thing is give value, and ultimately value will come back. So
Yes.
the
Yes.
first one I did was actually a virtual one in the Singapore FinTech Week in March 2024. And it started off by me just being super active on LinkedIn and giving resources away. So the biggest thing, for startups in our industry is knowing the three big things, right? For any startup to succeed, they need three things. One is they need capital.
Yes.
Is the obvious. Second, they need knowledge. So they need, in terms of advisory, they need key points. What mistakes have been made by the competitors or the other people. And three, they need resources. And this could be resources software. This could be pitch deck resources. This could be cap table resources. Just resources in general to help them structure better. So what I would do on LinkedIn back then would be, all the people who would be selling these resources, I would buy them up and then I would just put them on LinkedIn for free. And I would put investor lists on LinkedIn for free, and I still do that. And I would just put a bunch of feed there just to provide value. And ultimately, one of the guys who was hosting this side event in Singapore Tech Week, he said, "Look, it's really amazing to see, you giving all this value. I was starting to see some traction in terms of people who were following me, comments, engagement, all that sort of stuff." He said, "We have some fintech startups in Singapore who want to soft launch into the UK, the UK being one of the largest fintech markets in the world. And my background since being in financial markets," he said, "is this something you would like to talk about? Is this something you think you're an expert in?" I said, "Yes, my background is this. This is what I do, and this is what I have done. So I'm happy to have a quick chat." So I ran this online Zoom call, webinar, workshop, whatever you want to call it, for about 45 minutes, where there were about 50 people who joined the call. And I was just going through, in terms of when you're launching into a different market, consider the following factors, make sure you have a partner, make sure you've had a current client, and general sort of list of questions, and then the audience had a few questions. Um, in that audience, one of the guys who was part of Ibiza Tech Week, which was my first in-person event, which happened a month later, was there. He was present, and he really liked my talk. He really liked the points I covered, and he said, "Look, we're having this event called Ibiza Tech Week. We would love for you to come and speak about startups and investors." And I went there and spoke and did a dual panel on one, what mistakes startups can avoid when pitching to investors, and the second was for early stage investors, so newbie angels or newbie syndicate groups, in terms of red flags to look out for when investing in startups. And at that time there was a event organizer from Madrid that were there, and then when I went and did it in Madrid, there was an event organizer from Malaga, and then there was an event organizer there from London, and then so on and so forth. And it just kept building up and up and up. And then as I was doing that, obviously my LinkedIn started building up. Everyone started seeing I was doing more events. I was being more recognized. People would tag me in a lot of these things. People would see the speeches and they were like, "Hey, we're having this event. Would you like to come?" And so on and so forth. And it just started to build from there.
Fantastic, really fantastic. Well, you think about it, even though you're not technically being paid, if you're being flown in and you're getting free accommodation, and you don't have to pay the price of the conference. I presume you could attend the whole conference. That alone is quite a big fee, but of course you're not going to be taxed on it. So it actually turns out being tax efficient way of marketing as well. I quite like that.
Yeah, yeah, exactly. And if we find the right startup there, or if I find a good
Yes,
advisory client, which I 80% of the time do, it's a bonus on top.
and yeah, I was going to ask Amal, do you think the best way for sort of smaller fund managers like yourself to raise funds is by public presentations? Do you think that's the best way to go?
I think I wouldn't I mean I don't know if it is the best way because I haven't completely done it yet. I'm still in the process of it. I think everyone has their different setup, but if you
Yes.
look at the recent trends, right, especially from our generation,
Yeah.
currency is attention, especially in today's world. It
Yes.
definitely is, whether you like it or not. Your TikToks, your YouTube stars, in some cases they're bigger than your TV actresses and your
Yes.
general sort of guys. So
These
if
days.
you are someone who can bring in attention, who can dictate, and who can manage big crowds, then ultimately you would be rewarded for it.
Yes.
And that was the reason that I sort of decided to bring in a marketing team in-house and decided to focus a bit on my brand. So I definitely do think there is a big part of it if you are a big media presence. I know,
Okay.
2AM VC, he started to do that where he would have 30-minute podcasts with VCs, and then ended up being the youngest fund manager at 24, which the record I'm trying to beat currently. And he now I think is on his third fund and has raised over, I think, 150 million, 160 million,
Wow.
just because he had so much traction. Every VC would watch him, every startup would mention his name, and he's now been doing that for the past 8 years. So I think it definitely plays a key role, and you can see the same sort of stuff with the guy's name just slipped my mind.
So, so
They
how young are
that
you then? You said you're trying to beat a record of a 24-year-old. Are you not 24 yet?
I'm 24, but I think I'll be 25 soon. But so I'll be
That's
25 in
incredible.
September. But the planning to do my first close of the whole round by July. So his first one I think wasn't up to 10 million. So if I was to sort of do post that, so I'll be the youngest GP in the world to close a 8-figure plus
Wow.
fund if I
Incredible.
get it done by July.
Absolutely incredible. And also, I've looked at your LinkedIn past experience, and I was staggered. There was about 25 experiences, and you're only 24. So that is quite more than most people would do in a lifetime. So you've packed an awful lot into your very early careers. That's quite admirable. I've got this burning question I've been wanting to ask you. For a man who seems to work 24/7, do you have any hobbies or interests that A, you have time to do, and B, that you actually do outside of work? Or is work your hobby?
Um, I think it definitely is, and I think it really shows. I think I do love what I do, and it keeps me up in the night in a good way. So I definitely do enjoy it. But I think my biggest hobby now, would be two things. One, I love gym. I love staying fit,
Yes.
and I think part of that is just maintaining sanity.
Yeah.
And that is sort of my outlet into a lot of things. When I wasn't in it, when I was in school and university, I did a bunch of competitions. I had a sports scholarship to go to sixth form. I also had a partial scholarship in university, as I was part of the university team. Representing nationally in powerlifting, and I did a bunch of boxing there as well. So I think sports definitely is. Every now and then, I play club cricket. I'll go do wrestling and boxing. I mean, I go gym. I would say at least 5 times a week, and that's sort of my, well, part hobby, part just the way to say sane. And now I think I am rather boring. So I would say anything aside from that is just spending time with friends and family. Anytime I can just get to chill, have some, drinks, have nice food, speak with my family, enjoy some close
Yeah.
time. I would say I tend to prefer that. Anything other than that, I don't think I really have time for, nor
No.
I don't think
So
I
you don't
currently
work
have
all the
interest in.
time. You do have some time to switch off. I think it's important, and I do feel that keeping fit, although it can be a bit of a challenge because you don't really want to do it. I don't want to anyway, but I make myself do an hour's exercise every day, and you do feel better for it the rest of the day, and it's good for your mental health as well. So I do think that's the right way to go. Definitely is. So yeah, we're probably um, well into the interview now, but the thing I wanted to ask you as well is if you've what your plans are for the future. I know you don't have this 100 steps, but you must have some goals for the future, not just for your business, but for your personal life. What are your plans you can envisage in the future? Where do you see yourself going?
Yeah, yeah. No, I definitely, I mean, like I sort of mentioned, I have my far away goal, which I'll look up every now and then at. And that goal is to be the first ever trillionaire in the world. I stated that whilst I was 16. I have it written on a piece of paper in my drawer,
Very good. Yeah.
and it's now back in Birmingham where my mum lives. But I wrote it at 16, and I'm gonna make sure to make it happen. But that's the very end goal. But I think the more intermediate goal in terms of what I want to do, especially this year, is probably three things. I want to, one, do this close or first close on the fund, and sort of start deploying from that. And the second thing is probably I want to buy my mum and dad a house each. So that's probably the third thing on top of that
Excellent.
that kind of
Yeah.
stuff. So yeah.
So yeah, so you do believe in giving as well and being philanthropist.
Yeah, absolutely. I mean, I
That's
think,
good.
all the cars and stuff is cool, but ultimately I'll if I have no one to share it with, what's the point of having it?
Exactly. I think you've got your life in balance. It's not just, although you've got this goal of being a trillionaire, that's not the main thing, really. I think it's a lot more to you than that. That's just a kind of monetary goal. But because it's all very well having all the money, but if you're not got all the other things in life you need, for true wealth, that won't be, it will be a bit empty, won't it? If you don't have everything else,
Absolutely.
because
And I
wealth
think
is more
even
than just money, isn't it?
yeah, yeah. And even with the trillion, I think it's just to sort of say I have it. I've done it. It's I've said it to my friends often call me crazy. And I've said it, as soon as I get that trillion, as soon as it ticks, I'll donate 99.9% of it because I
Yeah.
don't want it. Right? People say I want to die rich. I was like, I don't. I want to die rich in memories, right? I don't want to
Yes.
die with a bunch of money in my pocket because I've not been able to use it. So I want to die with impact. That's my saying, right? I want to leave the world in a better place than I found it.
Yeah.
Ultimately, that's my way of giving back. And as soon as I'll hit that trillion, most of it will go away.
Well,
And people often ask, well, what about your kids? And I'm like, well, if I've taught them the right way, they shouldn't need my money,
no.
right? Because if I don't have any kids currently, but when I do eventually, but
Yes.
I'm not going to leave them a bunch of money. I'm going to teach them how to network, how to build businesses,
Yes.
how to go build value. And, if I've done the right thing, if I've taught them the right way, they shouldn't need my money. And
No.
if they haven't done that and they haven't learned that, there's no point them having my money because they'll lose it anyways.
Well, that
So
research shows that happens nine times out of 10. Family
yeah,
wealth just disappears after two more generations, typically.
yeah, yeah.
You remind me of Andrew Carnegie, who at the time, this is 100 years ago, the steel magnate, he was the richest man in the world. I think he got to $400 million, and it was his goal to spend it all before he died, and he did. He did manage to achieve that. But he left quite a lot of good legacies and left money to universities and other institutions. So it was a good cause. And then he got Warren Buffett now. He hasn't given away a huge amount of his wealth, probably given away about a quarter or a third, still several tens of billions. And he's starting to do that now. He'll give away virtually all of his wealth by the time he dies. So I do think that's a laudable aim. And I don't see why you can't achieve it. You've got the goal, you've got it written down, you're doing everything possible. Why not? I think you've got every chance, Anmol. You've certainly impressed me. And my wife Cholpon, she's a great admirer of yours. So, and sadly, we've come to the end of the interview now. But it's been very enjoyable, and would like to build on this relationship with you because I do think you'll do extremely well in the future. I do think you'll meet your goals, and you're a very inspiring person to speak to. So I really thank you for your time today.
No, it's been my pleasure, and thank you so much for
And
having
wish
me.
you
It's been
all the
amazing
best.
speaking to you.
I wish you all the best for the future, Anmol. Take care. See
Thank
you
you very
soon.
much. Take care. Bye
Bye for
bye.
now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.